Hi, my name is Neil George, and we are live at the San Francisco Money Show. And joining me is Chris Gaffney. He's president of TIAA Bank's World Markets Division. Chris, thanks very much for joining us.
Thank you, Neil.
Now, you've been an expert in the foreign markets for many years, going on, I guess, about 3 decades now. There's been a lot of movement in the U.S. dollar that's been quite strong of recent.
Yeah.
And that's setting up many people to say, well, where are some of the opportunities to cash out of that expensive dollar into some bargain foreign markets?
Sure.
What are some of your favorites right now?
Well, we traditionally like the commodity-based currencies, the commodity-based countries. We think that those countries that provide the rest of the globe with useful commodities, something that they're going to need to build infrastructure, to continue to manufacture goods and services, their currencies are going to stay elevated.
So we're looking at countries that have mining interest, agricultural interest, petroleum, and so forth.
Typically, those are the countries that we focus on. And right now, the dollar, as you suggested, is very strong. Some of the opportunities that we see right now are in Russia is one opportunity that I think, the Russian ruble has come under a lot of heavy pressure with the sanctions and so forth, the economy. There's investors have shied away from being in Russia, so that gives investors an opportunity to buy in fairly cheap in a currency and in an economy that's actually been holding up. So that's one opportunity. If you want a little less risk, traditionally we like the Norwegian Krone. It is a currency that, again, is their economy is based on oil and commodities. They've been diversifying outside of that oil base, but they have rock solid economic fundamentals, and I think it is a good currency to own.
Let's take a step back and look at the Russian ruble. So Russia's under U.S. sanctions. We have other European sanctions.
Right.
Is that creating limitations as far as investment in the Russian ruble?
Yeah, but we do offer investors the Russian ruble CDs or savings accounts. You can will allow you to convert from U.S. dollars into the Russian ruble. We'll hold that in an FDIC-insured bank account, and we actually are paying pretty good interest. I think it's somewhat over 3% right now on a 3-month CD. So the interest rates are fairly attractive for U.S.-based investors.
Now, while many people are saying that the sanctions are limiting some of Russia's growth, yet at the same time we've seen a lot of trade deals going on with the European Union. We have projects for gas delivery to Germany and elsewhere. So are the outlooks for the Russian economy better than what we're led to believe?
I think so. First of all, the Russian economy, the data that we're seeing come out of Russia right now are still fairly good. I mean, their economy is in fairly decent shape, even with the sanctions. So yes, and as you point out, they've created separate trade agreements with Europe, and China is another trading partner and relationship that they're starting to work with. So there are positive factors on the horizon. The big question, of course, is sanctions, if there's going to be additional sanctions. But we feel that, currently if the sanctions would be lifted or even eased a little bit, you could see that really benefit the Russian ruble.
So we have a known entity right now as far as limitations on trade and investment, the currency part of the equation. We've seen that the domestic economy is more than compensated because Russians are having to buy Russian goods as opposed to European or American goods, and therefore that's actually helping the local economy. Right. And if we get sanctions released, then you're advocating that things might very well be better. So we're at a constant now, and potentially with some upside while earning a better rate of interest.
Very well put.
And now Norway, just a quick closing. Norway and the Norwegian Krone is outside the euro. With the euro being somewhat weaker against the dollar, what sort of activity are we seeing for the Norwegian Krone against the US dollar?
It's actually been one of the more stable currencies. It's fairly stable. It had a good upside in 2017. So far this year, the dollar has been strong, mainly on the back of safe haven buying and money movement into the treasury markets in the U.S. But the Norwegian Krone is one of the currencies that's pretty much held its value. So I do think that there's really potential on the upside in Norway. Again, if oil prices continue to remain strong and we see any kind of movement out of the U.S. dollar as a safe haven.
So again, positive market for oil basically would benefit the krona. And again, any sort of dollar euro, the Norwegian Krone might very well be a good hedge against that.
I think so.
What sort of yields are we looking at in Norway?
There's not a lot of interest in any of the European currencies, so we don't pay typically interest on any of the European currencies right now. In fact, it's negative interest in Switzerland and some of the Scandinavian countries.
So investors are looking to capitalize on what's happening in the Norwegian economy and what's happening with their petroleum markets.
Right, and to benefit from any currency exposure.
Well, Chris, thanks very much for your insights. It's Chris Gaffney. He is president of the World's Market Division of TIAA Banks. I'm Neil George, and we are live at the San Francisco Money Show.